Welcome to Market Talk. I'm Amber Lancaster here with Paul Mampilly. Today's update is for the week of March 16th, 2020. I'll begin by previewing the big economic releases, my innovation story of the week, and the latest developments in America 2.0 and the fourth industrial revolution. And a special note to please excuse my voice as I'm just getting over a case of laryngitis. So let's begin. This past Sunday night, the U.S. Federal Reserve cut interest rates to 0% to 0.25%. They also boosted asset purchases and injected a number of actions, all geared to support the financial markets and avert a long-term economic downturn from the effects of COVID-19. As this Bloomberg, as they structure it, quote, it's a combination of 150 basis points rate cut in the past 2 weeks, the promise of an extra $700 billion in asset purchases, a $1 trillion liquidity injection by the New York Fed earlier this week, is all aimed to have an immediate objective of preventing a breakdown in the financial markets and a longer term objective of preparing the economy for the fastest possible post-outbreak recovery, end quote. So the U.S. Federal Reserve is not alone in the policy rate cuts in 2020. Bloomberg Economics doesn't think the Fed is out of ammunition with these recent moves with the rates near 0%. Quotes, expanding asset purchases is an option and works through more channels than just lowering borrowing costs, end quote. In all, the Federal Reserve is looking ahead and prepping the U.S. economy to have the fastest post-outbreak recovery possible. And as Housing Wire and the chief economist for the Mortgage Bankers Association points out, quote, these actions will lower mortgage rates, helping homeowners save money through refinancing and thereby providing a boost to the broader economy, end quote. And meanwhile, as I posted on my Twitter account on Friday, which can be found at A Lancaster Guru, U.S. company insiders are on a buying spree. Corporate executives are scooping up their company shares at a breakneck pace the past 2 weeks. Insider buying just hit a 9-year high. And quote, when insiders are buying, they think their companies are well undervalued, end quote. And in all, past buying sprees show that executives do start buying a bit early as they aim to find a bottom. But in all, quote, the last time insider buying spiked in this fashion, which was in July of 2011, the S&P was in the middle of a 19% retreat before staging a 10% rally in the next 2 quarters, end quote. So where upcoming economic releases are concerned, there will be 5 major releases this week. On Tuesday, retail sales advance month over month will post at 8:30 a.m. And February's industrial production month over month will post at 9:15 a.m. On Wednesday, February's housing starts will post at 8:30 a.m. And on Thursday, February's leading index reading for the leading index will post at 10 a.m. And existing home sales for February will post at 10 a.m. So now for my America 2.0 innovation story of the week. According to MedGadget, scientists have discovered a way to kill airborne viruses with cold plasma. University of Michigan and the University of Minnesota researchers have built and tested a cold plasma reactor that can effectively inactivate airborne viruses. This invention could disinfect anything from subway cars, offices, and hospital wards. So now for America 2.0 update. According to CoreLogic, the typical mortgage payment for U.S. home buyers that they committed to in 2019, well, it has dropped from the prior year. This means affordability has improved for many home buyers thanks to lower mortgage rates and smaller home price increases. So that's it for me, Paul. Powered through this laryngitis thing. Tell us what's on your mind, please.
Well, welcome back first, Amber, and what a market to come back to.
I know.
I've been watching the stock market since last night, and the market opened up, Amber, down about 11%, and it went through a circuit breaker. For those who don't know, since some period of time, I believe it started in the 1987 crash. They started to implement these circuit breakers to give people a little bit of time to think through, like, do you really want to push through all of these sales? And do you want to take these terrible prices that are being offered to you? Now, I know that a lot of people who are tuning in will be like, hey, Paul, you told me to buy way back 3 weeks ago. You told me to buy a week ago, and prices are lower. And I understand. I totally understand, and I totally get it. And the truth is that, and we were talking about this beforehand, which is that in something like 4 to 6 weeks, 8 weeks, even a country like China, which did nearly everything wrong. It now turns out that they knew that the coronavirus was around for approximately 2 months before they really took action. They're in recovery. South Korea, which did in some ways everything right, really has seen minimal impact. Now we are muddling through somewhere in between. We're not as bad as China, no question about it. And we're not as good as South Korea. So the virus is ultimately a flu virus. Warm weather affects it. Obviously, there is a period of time which, based on articles that I read, it looks like the period of gestation is about 5 days. And within something like 11 or 12 days, you would know if you're clear of it or not. In other words, the ultimate impact of this is as much about what we are trying to do to eradicate it. In other words, obviously, we want to get rid of this virus because it is novel, it is new, and it does affect a segment of our population disproportionately. And so the United States, in an amazing act, really, of what can I call it, Amber? Greater goodness, of putting the greater good ahead of individual interests, is deciding on its own, organization after organization, person after person, group after group. Where in the world would you have this happen, Amber? I have to tell you, it's the most extraordinary, amazing thing to watch. We are choosing to accept this pain collectively
Right.
and individually for the greater good, and it's an extraordinary, unbelievable phenomenon that I have never witnessed in my life, never seen happen any other time. Perhaps those folks that went through World War II and other extraordinary events will have seen it.
Right.
And why am I in the end talking about it? Because ultimately it does go back to the strengths of our country. And if you look at our country, our economy, our markets, are we going to recover 1 month out, 2 months out, 4 months out, 6 months out, 1 year out, 2 years out? And I believe with no question, 100%, 1000%, the answer is yes. So in other words, when you come back and now say, well, what is the relevance, Paul, to the stock market? What is the relevance to the stock market? Why are people selling today? Well, they're selling primarily out of the fear that the next 1 or 2 months, there will be a sharp downturn in the economy. And obviously there is going to be that, because if people are closing down, they're not going to have those sales that would have come through. They will not have those earnings that are going to come through. At the same time, if the recovery is there in 4, 6, 8 weeks, we will also open up, and clearly some number of business will be permanently affected. And I have deep sympathy for that. And we hope that between banks or informal lending or the government, that many of these folks will find ways to make it through this period, because running a small business is incredibly difficult and requires nonstop liquidity. We can hope that somewhere in between the networks of that we have, that these businesses will survive. However, in terms of the stock market, these are large companies that have, in many cases, billions of dollars at their disposal. They have access to large lines of credit at their banks. The vast majority of these companies are going to survive. For sure, some number of companies are going to face liquidity issues around refinancing their debt. So if you happen to have debt that was coming due this month or next month, and your business is not great shape, you may be forced to pay a much higher interest rate. However, this is where what Amber talked about comes into play. The Federal Reserve, in addition to what Amber talked about, cutting rates to essentially zero, initiating programs to buy the debt from the market, and I'm going to explain why that's important in a second. They also, on Thursday, said that they're going to provide $1.5 trillion worth of liquidity to the bond markets, the cash markets. And the entire idea behind this is to stop big money investors who are driving the sell-off. It is not regular investors. It's not Profits Unlimited subscribers, Amber, that
No.
are driving this. This is big
Mhm.
money investors
Mhm.
who are looking at their portfolios and saying, hey, my clients are going to be pissed off and angry that my portfolio is down and I want to raise cash. And so the Federal Reserve, by what it is doing, by lowering interest rates, by providing liquidity, is saying, hey, if you want cash, here's a ton of it. Take as much of it as you would like.
Mhm.
And so what that does is that it eliminates the scarcity of cash that happens with everybody wants cash at the same time. And then it also starts to address the issue of the desire for cash, which is driven by the panic that people feel, or the need that they have, that they feel like their clients are going to redeem. They need cash, they need to sell stock. And so the Federal Reserve and the government are taking various actions to really get at the heart of why prices keep going down. In other words, people keep offering stock when other people, in exchange, they want cash. And they want cash because they want liquidity, they want stability. And the government has created, and the Federal Reserve has created, the incentive now for wanting less cash and also pushing as much cash into the system so if somebody wants it, they can have it. So just to understand what is going on. In addition to that, the government has also passed some legislation on Thursday to help out various businesses. And I believe that given the impact that this has had, which is somewhat unexpected, given that it is still ultimately a flu virus that is going to, in the end, when the tally is counted, going to affect a fairly small number of people. I believe even at this point, Amber, around the world, it's something like 6,000 people, I believe, that have died, right?
Yes. Mhm.
Right. So just to go back, we did a study over the weekend in 2009 when the H1N1 virus, which was back then called the swine flu, it actually infected 60,000 people and killed in excess of 16,000.
Mm.
And we did not have a panic of this magnitude. Now, we went back and looked, and obviously post 2008, you could say that a lot of people had cash already. And so this is why you never saw that kind of panic really enter into the stock market, because people already sold in 2008 and early 2009. So people
Mhm.
already flush with cash. So this is why I believe the Federal Reserve's actions will actually come to stop the market declines. And I'm aware that the stock market today opened down 11%. At this point, I'm just looking at it right now. It's down about 10% or so. However, my experience is that there is a definitive reaction to this much liquidity coming into the stock market. And here's why. Because, Amber, what happens is that if you reduce the desire for cash, you reduce the incentive for cash. Now, things which have been going all one way, where people want cash, people want bonds. In other words, they want liquidity and they want safety.
Mhm.
And the Federal Reserve has reversed that desire. Why? Because by doing that $700 billion buy, what they're doing is buying bonds up, from the market. And what that does is that it causes other people to say, when the Federal Reserve goes to buy those bonds, it obviously bids them up. And if you have gains in it, you will sell it, you'll take cash. However, there's also very little purpose in being in cash, in the sense that interest rates are ultimately essentially back to zero.
Mhm. That's
And
right.
so what that then does is people then start shopping around to be like, well, I'd like a return that is better than zero. Where can I get it? Well, some people will be like, hey, I like some growth stocks that have been haircut by 20, 30, or 40%. Other
Mhm.
people will say, hey, I like some of those dividend stocks that have been haircut by 20 or 30%. Some other people will say, hey, I like gold. Other people will say, I like silver. Some people will say, I like Bitcoin. And so it has this effect of moving money from cash into what are considered risk markets.
Yes.
So just so that everyone understands what the Federal Reserve is trying to do, what is the purpose behind what they are doing, and why I believe while today markets are down, when the Federal Reserve does this, it is extraordinary firepower. It's sort of like having all of the monetary power of the United States, which is still a very powerful country, with the Federal Reserve essentially has an unlimited balance sheet. it can do pretty much, as it showed in 2008, what it wants to affect the economy and the policies of what happened. And so people should not underestimate this. And right now, today, our readers, I'm sure, and our subscribers, Amber, are feeling bad. Look, we've gotten hit, and we've gotten hit hard, no question about it. I stand up here and say, absolutely, that's been true. However, people that bought even into the declines of 2018, 9 months out, 1 year out, they were in incredible shape. And I believe that the same thing is going to happen today, because ultimately the underpinnings of our economy have not changed.
No.
We still have a phenomenal, incredible millennial generation that's 93 million strong, still coming of age, still rising in wages, Gen Z right behind them. We've still got these incredible, astonishing, phenomenal megatrends: the Internet of Things, artificial intelligence, blockchain, robotics. We've got technological developments in 3D printing, precision medicine, new energy. Space is now becoming an ever larger part of new industries that are being created. Coronavirus and this panic is not going to change that, does not change the trajectory of it. For sure, it interrupts some number of businesses for 1, 2, or 3 months. However, then we will pick back up and start to go back to the business of what we were doing. And the one thing I've been tweeting about on my Twitter account at Mampilly, and I just want to remind people that to follow Amber and I on Twitter. I'm at Mampilly Guru, and also subscribe to our YouTube channel. Give us a thumbs up if you like the content on this channel, and comment below on what you are doing as we go through this panic. Now, for sure, some number of people will have sold, and I get quite a bit of grief on Twitter of telling me that I'm wrong. And I totally understand what people are. However, our time frames, Amber, we are looking to make big money over time. And we can go back to everything from 2008 to the panic in 2014, then once again in 2015, 16, another one in 2007, 2018. And in every case, the right thing was, if you held, because stock prices went higher, that was the right move. And if you had a bit of money to buy in slowly, pick your spots, buy into what we would tell you to buy, which is America 2.0 stocks, fourth industrial revolution stocks, and the stocks of the great megatrends, which I believe, when this market starts to recover and the buyers come back in, that cash that is now piled up probably to the moon. There was already a lot of cash out there already, because we're in the post-2000 era where people always desire some amount of safety. Well, there's way more out there right now. And as buyers come back in, what is going to happen is that the stock is now concentrated in the hands of people who were willing to go through this volatility, who believe in those companies, who believe in that opportunity, and they are going to represent strong hands. Strong hands meaning I sat through the volatility, I sat through that difficult period of time. I will not give up my stock to you unless you bid it higher. And this is how markets recover, and I believe you'll see this start to happen. Last thing, Amber, which is that most people will want to wait until the all clear signal comes out. And I can tell you, on H1N1, it took over 14 months before the last case was seen. And I can tell you that markets will anticipate the bottom of the economy, of the companies for this period, and they will start to rise well ahead of the news. And so even as bad news continues to come out, you will actually see market starts to rise. And I believe we're in that bottoming out process. Early on, I said that markets do not bottom all in one shot. Each company bottoms out at a different period of time because it has a different investor base, different people who follow it. And I believe that you'll see markets start to bottom out. And then I believe you'll start to see buyers come in and come to bid it up. And now the momentum will turn. And the momentum, once it turns, will be unstoppable, because the Federal Reserve has set the stage for it. There is no incentive to be in cash. There is no incentive in some ways to be in bonds, because bonds are at very low yields. Only the true safe folks. So you'll see a gusher of cash come to bid prices higher, and then this will be reversed. I know this is a hard period of time. It always is. 2008 was hard. 2014 was hard. 2015-16 was brutal hard, and so was 2018. And I know this is hard. However, I believe the reward for staying in is going to be large and significant, which is why we have guided our readers, our subscribers, to stay in, understanding that this is still a process we have to go through and endure through, because volatility is very much a part of the market. So that's my message, Amber, to our readers, to our subscribers, which is that I know this is painful. However, I believe this is temporary. I am still bullish. I am still optimistic. I am still positive. I believe our stocks will recover, and I believe that our stocks will make new highs, because what is going on right now is temporary, and I believe it will recover. And with that, back to you, Amber.
Thank you, Paul. Excellent words of encouragement. And thank you to our viewers for tuning in. I just pray everyone stays healthy and well, and we'll see you again next week. Take care.